Afternoon, Bob Dalton coming to you from Allendale's trading floor here in McHenry, Illinois. It is Tuesday, January 18th. We came in this morning with some higher prices on the board from the overnight trade in the wheat and corn market. Beans were faltering a little bit, and we saw that excitement continue over on into the open outcry session as well. Led by wheat, and the story broke last night, or actually it was a report of a tender done by Algeria. They bought over 600,000 metric tons of wheat from France, and that caused the wheat market to rally just because they're seeing demand out there, and that's a big order. That was actually twice as much as they were anticipated to buy. The reasons behind it, well, they don't want any type of food scares or food scares due to demand versus the supply out there, and they don't want any rioting going on out there. So they're buying wheat, and they're going to stockpile it as needed. They didn't buy any from us, though. That's the big letdown. But that's not going to disturb the speculators from coming in and buying the wheat market off of fundamental news that someone out there is buying big amounts of wheat, whether it's from us or not. We may very well be pricing ourselves out of the world market at these levels that we are currently seeing. Again, technically, the wheat is still bullish, so they're going to come in and buy it. So we saw wheat today finish the day up 20 in Chicago, 7.93 and a quarter. Corn did follow. We finished higher in the corn, 10 3/4 at 6.59 and a half. Beans, how come the beans couldn't gain today? We were up at one part of the day, and then we ended up the day down 9 1/4 after finishing the overnight session lower as well. Soybeans settled at 14.13 and a quarter. What's the deal with beans? Well, Brazil, Argentina got rain, and they got good rain, and the rain was beneficial, and we're looking at a record crop coming out of Brazil possibly now. They're not going to be exporting any beans this week because they're striking, which we typically see this time of the year from the South American countries, Brazil and Argentina, namely. So what? Okay, so what? They're going to take a week off from exporting. We're going to see them come back in. They're going to regain their market share in the world, and right now they have a healthier crop than when they turned off the machines on Friday. So we'll see what happens here, but that's why the beans were not able to post any gains here in the nearby contracts. We did see some good rain in South America. Little direction from outside markets today. The dollar is lower. Wheat is traded both sides of unchanged today. Right now the dollar's down 34 at 79.17 and a half. You have crude oil at 92.18, down 40 cents a barrel. The big surprise came out of the livestock market today, and for those of you who follow the markets on a daily basis, specifically the feeder cattle and the fat cattle markets, it shouldn't be all that much of a surprise that we were higher. However, the fact that we were limit up in the feeder cattle at one point and then pulling them on back hard into the close really, had some people shaking their heads. Are these blow-off tops that we're seeing in both the feeder and the fat markets right now? Well, some of the sources we talked to on the floor said that the April cattle, anyhow, he's excited to say that a short-term top is up around that 116 price point. Feeder cattle today the fat cattle today in the Feb contract finished at 109.20, down 17.5 in the pits. The high today in that contract was 112.25. So you can see we had about a $3 pullback there in the fat cattle contract nearby today. Feeder cattle, more the same story. We were up $1.70, 127.72.5 in the January. However, about $1 off the highs. 128.64 is where we saw our high today. In a hog market, about the same could be said. We had a strong rally out of the gates, and that rally faltered as the day went on. Nearby hogs finished up 95 cents at 80.47.5. The high today, 81.30. So, for you hedging cattle out there, be very, very careful. If, in fact, the tops are not in, and we see buy and pick up again in the second half of today's trade, which accounts for tomorrow's electronic trade, there may be some funds out there excited about owning cattle off of a pullback from the highs like we saw here today. Others are out there saying that could be a blow-off top. Be careful. Maybe sell on stops if we continue on down. So, keep an eye on the cattle market. The corn market right now, not swaying the cattle either way. The stronger corn gets, it seems the stronger the cattle get. So that old relationship is not working right now, nor is really anything. If crude oil is down, typically you see corn go down. Crude was down in points today. Really didn't cause the corn to stumble at all. Even when the dollar's stronger, we watch some of these commodities rally as well. So throw what you know out the window. keep an eye on technicals. The fundamentals aren't being paid too much attention to unless they're bullish. And in closing, I'll remind you that this week is our conference here in Crystal Lake. If you have not yet signed up, we're approaching 0 hour. Call in. We'll get you your seats if there's any available yet, and make sure you can get into a hotel room as well. Phone number here is 800-262-7538, or you can find information regarding the conference on the website, www.allendale-inc.com. Thank you for listening, and have a good trading week this week.